Peter Rose, Longwood Currency Trading. Balancing your goals against your ability. That's what I want to talk with you today on a beautiful late August day in 2021. I came out here to get a cup of coffee, which was successful. And then I thought, look, I'd rather do this here in the kitchen because it's such a pretty day, and I want to go back into the library. I have my trading platform up. The trade that's going against me, I don't want to watch it. And I've got some other stuff. I've got my batteries charging up and all kinds of crap going on there. It's a mess. So I'll come out here and talk with you out here. You know, when we talk about what we want to get out of our trading, you have to zero the thing down. What do you want to do? Well, I want to make a lot of money. Well, okay. You got to have goals, not only in the end result of the amount of money that you want to gain, which is a reflection of the skill that you have, but also even on a trade entry basis. Is the trade offering you enough money to warrant the risk that you're going to have to take? If the trade's only offering you 3 pips and you've got an ATR of 8, I mean, there's no reason to take that trade if all you're going to do is you're going to, like, for example, you're thinking about going long, and the 3 pip profit target is right at a resistance zone, let's say, and so the chances of it not going that 3 pips but going away from the resistance zone is greater. Okay, you get that. Okay, so we got to all have goals, and they have to be realistic goals. So you look at, from a day trader, I've said many times, yeah, I'm not going to get into a trade unless the field of battle, the market chart, is offering me at least 20 pips, and I'd like to see 25 or 30 because usually how you define your zones or whatever is like everybody else does, is where do you find these congestion areas between support and resistance. Now, I'm not a strict support and resistance person, as most people are, because I feel that those zones are created by large institutional traders that are offloading large positions, and many times those zones repeat themselves because they don't. The client says, look, everybody else is getting 1.436 for their money, and I don't want to pay more than 1.439, and if you can get my money down as far as 1.428, that'd be great. And so you have all these clients that are saying, this is all I want to spend for the products that I'm buying, that I'm exchanging the currencies for between the two countries. And so that's why you're getting support and resistance lines, not because that's as far as the price goes, and that's where all the pickup orders are, so that you get stopped out if you or the price turns around when it gets to that point, because there's so many orders at that level. They're there for a reason. Regardless, get a resistance zone, okay? And you say, well, I'm a day trader, and I want to get in and get out within a couple hours if I can. And I mean, I see guys that trade all day long and make their money as a professional trader. Well, that's great, but I don't want to sit at my computer terminal all day long to make a day's wage. I want to make a day's wage in a couple of hours. So my way of looking at entry analysis is a little bit different than what someone else would do, as far as what the goals are and how long I'm going to be there and all that other crap. But that's what I teach. Okay. But for the purposes of this, you have this. Let's say the structure that's surrounding what the area that your price is currently in, appears that there isn't a congestion of orders and it's 30 pips away. So there's plenty of room there in order for me to go in and take that trade. Now, we could say that the profit target is 30 pips, that the goal is 30 pips, but two factors come into consideration. How likely are we to get the 30 pips? And number two, and that's just price action and time. And number two is, do I have the ability, both from a technical standpoint, my skills, and my psychological makeup, in order to get 30 pips, based on the price action as price bounces around between whatever that boundary line at 30 pips up from, maybe I'm down close to the support zone, so I could be bouncing off that support zone before I get back up there, and I could trigger my stop. I don't know where my stop is going to be. Well, I mean, I know where mine is going to be, but in relationship to how everybody else trades, you're balancing all these things as you look at this trade entry. So it's important to have the goal. The goal is the 30 pips. Now, do I have the skill to get that 30 pips? Do I have the ability to get that 30 pips? And if you're starting out or you've got less than a couple of years of trading behind you, look, you don't have the ability. You don't have the psychological makeup to do that, unless you've traded with a fairly large account and you've lost $20,000, $30,000, $40,000, and then the dangers inherent in trading dawn on you. You know, we all wear seat belts, not because we were in a car accident and put our head through the window, but because we have friends who have been injured severely because they didn't have seat belts, or that they weren't injured because they had seat belts. There's videos out there of people who have gone through the windshield. It doesn't take a really bright person to understand that you're better off wearing the seat belt than you are if you don't. So, you know, it's pretty clear as to what your ability is at protecting yourself with a seat belt. But do you really have that psychological ability as a beginning trader without getting hurt early in your trading, so that the dynamics of that market are very clear to you, and you recognize the only thing you have control over is how much you're going to lose. And if you can just nip that in the bud, you're going to lose a lot in the beginning, but you're going to learn, and so therefore you'll learn what not to do. And so, as Jesse Livermore says, when you know what not to do, you figure out what to do. So you may have this goal of 30 pips. You may be you certainly within I don't know, if I work with somebody, it takes them a couple of weeks to figure out how to set a profit target goal. You know, then you take a couple of weeks, 15 minutes. But you don't have the ability to get there because maybe you're greedy at the wrong time, or you're fearful at the wrong time. So what are you going to do? Well, you know, it's probably easier to get 10 or 20 pips out of a trade than it is to get just 3. You know, many times I say, well, if you can average 5 pips every time you trade 3 days a week, you make 15 pips, you make 60 pips a month. I mean, that's a 600% return. I mean, a 60% return on $1,000 incremented levels. You make $600 in 1,000 bank, it's a 60%. You make $6,000, $10,000 account, it's the same thing, it's 60%. But the reason you don't end up making that 60%, oh, look how easy, and I say this, I'm guilty of this, how tough is it to make 5 pips? Well, it's not very tough at all. If you're trying to get 20 and you lock the 5, which means that the price has got enough to go 10 or 15 so that you can bring your stop up and lock 5 pips. You know, then it's easy. But to average 5 pips when you don't have a lot of ability is difficult. And so if you just set your goal for 5 pips because you're a beginner, you're going to fail miserably. And if you set your goal for 30 pips, you're going to fail miserably. So what are you supposed to do until your ability catches up with your goal? Your ability should never catch up with your goal. And that's the beauty of trading, is that you can continuously up what your goal is without changing the number of pips that you look for. How do you do that? You throw more wood in the fire. You get a bigger truck and back that up with money, and you put more money into it. Instead of making $600 on 1,000, you make $60,000 on 100,000. You make $600,000 on $1 million account. Well, how am I going to come up with $1 million? I don't know. That's your problem, not mine. I'm just trying to show you that the way that you scale up the dollar amount that you want to make is not by the number of pips or the number of trades that you make. It's by the number of dollars that you have in your account and how consistent you are with your trading at the $1,000 account level. Because if you can't make 600 pips a year on a $1,000 account, you damn sure aren't going to be able to make it on a $100,000 account. So you have to balance out what you're capable of doing. What would be reasonable for you to make in the first year or two that you trade? Geez, you know, if you could break even after 6 months, you'd be doing great. I mean, this is if you really didn't have good training that was directed and specific to working with not only your technical abilities, but also setting these goals and helping you with your ability levels in achieving reasonable interim goals with long-term target goals as your objective. And I think that's how you balance ability with goal. You don't ever want to be satisfied making $6,000 a year from your trading. I mean, $6,000 a year on a $10,000 account is 60% return. That's terrific. But if you made $6,000 a year on a $50,000 account, you're making a little over, you're not making 60%. Make it 6%. So, what's wrong with that? You're developing a skill. Because if you can make 6% a year on a $60,000 account, you could make 6% on $1 million account. So then the problem becomes not one of trading, but of finding enough money to add to your bank. And that's a hell of a lot easier than trying to figure out how to do your trading the right way after you have a big account, and then you screw it up like I did. Because I relied on all these people that are teaching out there, that they were teaching the right stuff. And they're not. Because they either don't know how to teach, or they're just jacking with you. It's scary. There's some very, very sincere people out there that are teaching, but if you're not experienced enough to look behind the lines of what they're saying, and you just try to blindly do what they're telling you to do, you're going to go to the wood. You really will. And if you don't, early on with those little accounts that you have to start with, because you don't want to risk a huge amount of money until you're pretty confident that you know what you're doing, and because your attitude will change dramatically when you go, trust me, from trading 3 mini lots, $3,000 account, to trading a $30,000 account at $30 a pip. Life's going to change for you. If you don't believe that, great. Go read Mark Douglas, Trading in the Zone. And if you don't believe that, I'd go out and get $100,000 if I were you, and I'd just flush it down the toilet, because it'd be a lot more fun to do that than lose it trading. So balancing your goals with your ability is not a static process. It's a dynamic process. As your ability changes, then your goal, your master goal, which is to make more money by having more money in your account. But the real skill level is staying consistent when you go up in scale from a $10,000 account to a $100,000 account. You think I don't know what the fuck I'm talking about? Look, I started trading mini lots back in 2012 and got flushed out of that. Went back and did research and stuff and traded a $40,000 account and lost all of that because I thought these guys knew what they were doing. I thought what they're talking about. Oh, well, let's look at moving average crossovers. Let's look at Bollinger Band. Let's look at this. These people say this stuff works. Let's take a look at it. We'll make it work. I'm a scientist. It doesn't work. And so I've traded a $100,000 account. And I know the difference in how you feel and what you need to do to trade a $100,000 account than the skills that you have to have when you trade a $1,000 account. It's different, and don't let anybody tell you different. But there are so many things that are common that if you can convince yourself of the commonality of ability matching goals, and all you're going to be doing is putting a little bit more wood on the fire as you increase in size, if you can balance that stuff, then there is no difference in trading a $1,000 and a $100,000 account. There shouldn't be. Then why aren't more people trading $100,000 accounts? I didn't make $100,000 to put into my account by trading it. I'm a millionaire in real estate. I sold a building and I've got that as a bank. I don't trade it right now because I just got through that period where I lost the $40,000, had to reevaluate everything and go through a couple of years, 3 years. I lost it in 18, so we're in 21 right now. But you don't want to jump back into the pool with a $40,000 account until you're pretty sure that you know what you're doing. You know, I've got a 60,000. I'm trading 40,000 for full lots. I've got a position on right now trading $40,000 account, but I'm just picking away at it. You know, I might decide to trade a $20,000 account and work with that, because what I'm trying to do is I'm trying to make up for all that lost time watching all these fools on videos and break bad habits. I've got bad habits. And you know as well as I do, if you've played tennis before, and I don't play tennis, but I have a little bit in the past, but if you get a bad habit, it takes a long time to change that. If you play chess and you get a bad habit, it takes a long time to change it. And when you compound these bad habits with fear and greed and hope that we have in the currency market trading, man, it's really difficult. It's not impossible, but you have to step back from things. I mean, I was used to trading a $40,000 account, so when I reloaded the account and stuff, that's what you want to do because that's what you're accustomed to do. You know, if you buy a fairly nice car, and then it's time to get another car, you don't want to go down and drive a beater again. You know, you want to buy another really nice car. But you know, if you drove that car foolishly because it's got too much juice to it, and you rubbed it out, well, you know, before you buy another fancy car with a lot of horsepower, you may want to buy a beater. and learn how to drive correctly and safely and follow the rules. And that's what learning how to trade provides for you if you have a good educational resource that you're looking at. I'd much rather rely on what's being written in the books than a lot of these people that are doing YouTube videos, simply because the person who wrote the book really had to know what he was doing in order to put it down on a piece of paper. Now, he may not be able to teach it right, but at least the information is correct for the most part. And he's had to be peer reviewed. The only caveat that I have to that is you have all these people trading moving average systems. They think they work and all this other kind of stuff. Some guy writes a book on moving average systems or engulfing candles or Bollinger Bands or whatever the hell he's using. And they all go, yeah, we've seen that. We use in Bollinger Bands. And, you know, because we use all of this shit, we get mediocre results. It's called diversification. You know, you don't just trade one indicator because that doesn't work and you figured that out. So you trade a half a dozen of them and you have confluence. As I said before, if you have 5 indicators, there are 325 different permutations you can put the order of those indicators are used into. So there's so many different combinations of decision process that you make that you're really averaging your skill and averaging the utilization of the indicators over such a wide sample size that you're going to get mediocre results. But if you're trading with a large account, a mediocre result is a lot of fucking money. So you just can't do that trading a $1,000 or $3,000 account. So you have to be careful about even what you read. But at least there was some review of the material, and then you go on Amazon or something and you read the reviews of people that have read the book. Oh, I just love these guys. I just bought this book. I've read it in 2 weeks, and man, it's the greatest book I've ever read. Fuck you know. You know? Try it for a year and then talk about it. So it's important, I think, in your trading, particularly in the first couple of years of trading, as you're learning your skills and you're building your account and you're reaching all this success, that you understand that that success is moderated by the balance that you have between your goals and the ability that you bring to the table at that time. And the balance is simply the amount of money that you make. That's the only thing you have to satisfy yourself with. When you become, until you become consistent, you can't afford to go up in bank size because you don't have the psychological change in order to make that jump right then. There's guideposts, I guess you'd call them, that you look for that indicate to you when you're ready to make that transition. And so if I work with somebody, you know, we might work for 3 months together to get the person comfortable at that $1,000 level. I could work with somebody for 2 weeks and they go, I get it. It's possible to get it. Look, I started looking at currency markets in 2007, made those first mini account trades in 2012 because I was doing the stuff before as a technical exercise. I had a 33-year career as a senior software engineer doing business application. So I wrote simulation code for years and years and years against the markets, and I traded it in a simulated account for. I didn't intend to have a real market. I mean, a real account. I was a real estate investor. That's where my money comes from. So I just did it as an academic exercise until I got to the point where I thought, what? I could do this, and I was winding down out of my real estate. Well, I could do this. I'll put some money in from my sale of one of my buildings, and I'll take a run at this, because I hadn't been doing the trading study to trade. I'd been doing it as an exercise. So my simulated account was a $40,000 simulated account, and all the simulation applications, the computer applications that I wrote were based on $40,000. Well, trading in a simulation and trading in a computer program and trading in a simulated market environment in a sim account is totally different than when you put $40,000 on the line raw without taking the little baby steps that you need to take in order to learn how to gear up. So that money went. And I spent a year trying to well, I didn't spend a year. I spent, well, I'd spent a year up to that point where I had funded the account with $40,000, really seriously looking at the thing and doing my analysis and writing rules based on the stuff that I was learning videos and all the books that I read. But after I lost that money, that was a wake-up call. Because that's a lot of money. Oh, wait a minute. My goals here must be out of line with the ability that I have. I've been deluding myself with the ability. Certainly not the goal, because from a calculation standpoint, there's no difference in trading a $1,000 account or $1 million account. $1 million account, you might start to run into some slippage on price, trading 100 lots. But let's just put that aside for now. So when I stepped back from all this and I looked at it, what happened? Where's the disconnect? What, I've got the right goals, but how come the ability failed me? Maybe the goal is wrong. And I was left with the $5,000 after I lost the 40, and so all of a sudden, boom! It dawned on me when I was pissing and moaning about all this stuff, and I sat down. I go, okay, let's approach this scientifically. This is a problem, and so let's solve it. And I looked at the thing, and as I've said many times, I figured it out in 15 minutes. All I had to do was step back from it and use the skills that I have from 40 years of real estate investment and over 30 years as a software engineer and a degree in physics, and all those skills that I have, I found I didn't use them because I relied on the YouTube videos and the books. As soon as I used those skills to look at how to abstract out the key elements of it, I said, well, maybe this is it. So I fooled around with it in that with a mini account. I was trading 5 minis at the time with a $5,000 account. So with a mini account, I played with that for about a week, and I thought, well, is it really that simple? And I doubled that $5,000 in about 4.5 months. Now, whether I could double a $100,000 account in 4 months is no, probably not. Because again, there's a difference in doing that. Now, maybe after trading a $100,000 or $200,000 account for 3 or 4 years, or a year, and seeing the kind of success that I need to do and making the tweaks that you need to make when you're trading the larger size accounts, yeah, maybe you could. Maybe you could. But there would be no need in doing that. Why take that additional risk? Because when I doubled that $5,000 account, the loss of the $5,000 wouldn't have impacted me at all from my net worth and the fact that I'd already lost 40, so another 5 would have been just shit dust, so I didn't care. And that was the key to the thing. I was there to learn what to do right, not to try to maximize the thing. I wasn't trying to double the account. I was just trying to trade the right way. I balanced my goal with my ability. That's what I'm telling you. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.